Are you of the opinion that generally the U.S. dollar being the world reserve currency and, the U.S. treasuries being basically ubiquitous, has that been, where do you fall? And has that been positive for America as a nation, but maybe bad for the people? This gets back to kind of Triffin's dilemma, right? Where do you stand on that? And is that kind of what's informing this base case of why a neutral reserve asset needs to happen, whether it's gold or Bitcoin, sooner rather than later?
Yes, with it broken down into two discrete periods of time. So when we did this 73, 74, we weren't exactly winning the Cold War. We just lost in Vietnam. The Soviets were seemingly on the rise. And so I think the dollar as reserve currency with Treasury as primary reserve asset made a ton of sense. It, I think, was arguably the most important factor in winning the Cold War for a simple reason. And Bitcoiners will understand this intuitively, for proof of work. The Soviets had to raise every barrel of oil they put on the market, and that was their hard currency. And we just had to print the money because the Saudis were essentially backing the dollar with their oil. We won. 89, Soviet Union collapses. In a perfect world, there is a new monetary conference, a la Bretton Woods, and we move back to a neutral reserve asset, and we go on from there. We don't have a perfect world. The end of history, Fukuyama, the boomer politicians, New World Order, whatever you want to call it. Corporate America played a big role in this of hey, let's press our advantage. We're going to sort of colonize the world with American products and culture and blah, blah, blah. And so practically what happened is we had NAFTA, get rid of the factories, get rid of the jobs. We can control domestic labor. We can lower costs, maximize corporate profits. We start sending the stuff to Mexico for a few years, and then we send it to China. And this second discrete period of time, it's no longer in our interest. Essentially, we are eating our seed corn. We are hawking control of America to the Chinese for cheap goods. And that, in the short run, feels like a cocaine and booze-fueled party. It's not like I have a lot of experience with that. I'm a bit of a nerd, but you get the point. It sounds like a lot of fun. And the longer and later the party goes on, the worse and worse it gets for more and more of the people, especially if it's your house, right? You're holding it at your house, it gets sloppy. And that's kind of where we are. We have now, and the first people to realize this were the people who care most about supply chains, right? There's a great quote by former Marine Corps General Barrow, which is, amateurs study tactics, professionals study logistics. And the guys who study logistics are going, hey, we're borrowing money from China to build weapons to face down China using increasingly Chinese components. And they started saying this over a decade ago, almost 15 years ago. And nobody was listening because you know what? The cocaine and booze fueled, free money, dollar party. Great. Who cares? The S&P is at all-time high. Who cares if COVID, I think, Trump started to wake people up to this. COVID completely woke people up to this from the standpoint of even the most dogmatic American policymaker around the dollar system as dollar reserve currency, treasury bond primary reserve asset was saying, why can't I get PPE and masks for my kids? Oh, because the Chinese make it all. Wait, that's not good. And then I think sort of the cherry on top of that was what just happened in Ukraine, which is a country with, that's a glorified gas station with 1/10 our GDP and the ruble currency. They just beat NATO in Ukraine. They did. They outproduced us. We couldn't produce enough shells. We couldn't produce enough missiles, and certainly not enough to supply both they and the Israelis in the Middle East. And that, I think, was sort of the final straw of this dollar reserve currency primary reserve asset treasury system is now hurting America. It is now an acute threat to U.S. national security. Because the question the guys who study logistics are going, if we couldn't outproduce the Russians in Ukraine, how can we credibly threaten to supply and support Taiwan 6,000 miles away when the supplies to do so are 30 miles away on the Chinese mainland? The answer is we can't. And so that, I think, is the two discrete periods of time and why we are now I think we're going to be post-Ukraine soon. I think that's something will get worked out there is accelerating the restructuring. This is going to force some sort of monetary system realignment that features a neutral reserve asset. Because the guys with haircuts like mine and big weapons systems that are getting too much sourced from China are going to go, that's it, guys, we're done.
You had a great tweet about this. That was essentially the debate around a U.S. neutral reserve asset is misframed. The question is not why do we need it? It's without a neutral reserve asset-based system, China will be our biggest defense-based supplier in 5 to 10 years. Is that what we want? And I thought that was just like such a good framing of it to put it that way. That followed up that with, without this neutral reserve asset, America's role is emit the USDs and USTs, and the world needs to trade. And then that really means send China USDs. It needs to build the U.S. defense industrial base, which is just kind of insane when you think about it that way. It's like, well, that just leaves us with our pants down, right? That's not a situation we want to be in, practically.
No, and buying up control. Right?
Go ahead.
Buying up control and influence.
Right. I mean, yeah, if you look at even just the amount of whether it be farmland or actual, U.S. companies or whatever that's owned by China, it's kind of staggering, right? And that seems to just put us in a really disadvantageous position if we want to continue to posture the way that we have, if we want to have any sort of credible threat on our side. And then you also, I think you had another tweet about China was, this was just a one-off here, but China hacked the U.S. Treasury system somehow, or the U.S. Treasury's computer. And I think you brought it up with a nice quip about, it's weird, they haven't been able to hack Bitcoin yet. But I thought that was an interesting one. I don't know. And while I'm on the subject of your tweets, another one I wanted to ask you about was you had talked about basically why do a Bitcoin strategic reserve when you can basically just begin redirecting part of the U.S. NIIP, and then which is already buying up U.S. equities, and direct this into BTC by getting MSTR into QQQ, which it is now, and then let large passive flows and Saylor buying do the rest. Can you expand on that a little bit? And if that's something that you actually think is like, I couldn't tell if it was a little bit tongue in cheek or if there was some a bit of a grain of truth to it. So I'd love you to shed some light.
Yeah, look, so that NIIP is a net international investment position, right? So that is essentially just what we own of their assets versus what they own of us, and they being all foreigners. By virtue of our trade balance, you can see where a lot of that is, which is China. The NIIP chart it's an asymptotic, it's an exponential curve up. I mean, it was. And it's especially post 2015, and that NIIP chart is up huge. Foreign ownership of equities is up asymptotically, exponentially in that same time horizon, and so are the Qs. And so, it sounds a lot nicer coming off the tongue saying milkshake, but what it really is eating our seed corn, hawking our family silver to China for cheap goods today to keep inflation down somewhat. And it fundamentally, it was a little tongue-in-cheek, but not that much of this. Yeah, there it is right there, right? So the green is the net international investment position on the left-hand scale. The red is the NASDAQ 100 on the right-hand scale. And the blue line is the foreign direct investment in U.S. equities. And so you can see 2015, foreigners had 2014-15 had $4 trillion in U.S. equities. 10 years ago, not that long. And now it's 16 trillion. So they bought 12 trillion of U.S. equities, right? And a lot of that's China, all right? It's not the Europeans, right? Everyone's like, oh, the Europeans and the Japanese are in such trouble. Yeah, and great. That's not them buying, right? If they're in such trouble, they ain't buying all that stuff. This chart fundamentally gets back to what I talked about earlier around in 74, around the question of, again, I'm not picking on Arabs. I'm just quoting the historical document. Just to be clear, the U.S. and Western Europeans had an issue around Arab ownership of U.S. and Western European industry after oil was revalued so much. They were just buying it all up. Politically, they weren't sure that was the right thing to do. Fast forward to today. What we are seeing right here in this chart, the Chinese buying up American equities. And corporate America's got a lot of pull in Washington. So the more that China controls U.S. equities, the more, it's the way capitalism works, you own the equity, you make the call. And in America, the way it works is you own the equities, you make the call in Washington too. So you need a way to shift to a neutral reserve asset. Now, we can see all of the contentiousness around gold, around the strategic Bitcoin reserve, right? It's a political harangue in this country because of the checks and balances, whatever. There's no check and balance needed for this. This is just MicroStrategy's in the queues. There is going to be, as you can see in that red chart, which is the NASDAQ 100, there is a mindless flow. And so now, if China buys the queues, recycles into the queues with NIIP, they're going to be buying a little sliver of Bitcoin. They're going to be bidding up Bitcoin, which is going to be making Bitcoin big enough to be a neutral reserve asset, which is sort of moving us in that direction. I'm not saying it is the SBR, but it's a move in that direction. It is absolutely a move in that direction from a flow perspective. You want to know what else will be interesting? Let's watch. I bet you Palantir goes into the queues. In fact, I think they just did.
Yeah.
So now China's mindlessly bidding the queues with NIIP, bids up Palantir, which is helping the United States reshore and provide capital to them. Watch, I bet you whenever what's the other big private, the new defense guy? I bet you whenever they go public, I bet you they'll go into the queues remarkably fast. So it's a way, it is somewhat tongue-in-cheek. It's not the SBR from a pure standpoint, but I still try to respect the 280 character because I feel like people won't read it if it goes on. And so sometimes I need to be more flip than I otherwise would be or less nuanced. But that from a flow perspective, there's no denying. That's like, now we can get into a debate around, are the convert markets getting saturated by MicroStrategy convert issuance? There's some signs of that. Is that, switch to other parts of the capital stack? But ultimately, at the right earnings multiple, bid up by mindless passive flows, just grinding, MicroStrategy is issue common equity, do a secondary, buy Bitcoin. And at some point, they'll have enough Bitcoin where actually diluting the equity by doing a secondary and then using it to buy Bitcoin will drive the stock up, not down, right? It'll actually be accretive. And so to me, I just felt like in the same feeling I had in 2020, November 2020 to December that I started off with of like, oh my God, like this realization of like, I'm wrong. This isn't a bubble. This is a currency issue, right? With Bitcoin. I had that same sort of holy cow moment, the splinter in my brain moment of when MicroStrategy went into the queues and people weren't expecting it. It was like a coin toss chance, I think, in the betting markets, if I recall correctly. And it went in, like if I was in the intelligence community and someone said, Luke, find a way to backdoor Bitcoin into as a neutral reserve asset so we don't have to go through all these friggin' politicians, which are a pain in our ass. I'd be like, oh, dude, that's easy. Get MicroStrategy into a major passive fund. Markets will do the rest. Is that what happened? I don't know. But if I could think of it, come on, I'm not the only guy.